coming up on Thursday as well. Let's bring in Shana Sissel. Shana is founder and CEO of Banríon Capital Management, joining us from Chicago, Illinois. And Shana, I know we've been really trying to navigate our way through the fog of the war, but now we've got earnings to kind of focus our attention here. And it's really going to be on spending by big tech and spending by consumers for everyone else. How low or high is the bar, do you think, heading into some of these key earnings?
Depends on which one you're looking at. So let's start with consumers. We've seen consumer sentiment and consumer confidence numbers diverge, which is highly unusual. And I think that speaks to sort of what's going on underneath the surface with consumers as it pertains to just general income levels. Consumer confidence remains high, and spending is seems to be correlated more with the confidence number than the sentiment number. But the sentiment number has been at record lows, and that kind of speaks to the stress on the U.S. consumer. I think that is and should be a concern for the global economy, as the U.S. consumer is basically like the undefeated spender of the world. U.S. consumers spend substantially more than anywhere else in the world. We have the lowest savings rates, and that's just because we are a nation that likes to spend money. So I am paying attention to that. Now, on the spend level for technology, I think that the bar continues to be quite high and that companies will meet that. There is a general belief and understanding, and I say this as someone myself who's adopted AI, both in the solutions we offer as a company, but also in a lot of what we're doing internally to like just do things like update our tech platform and rebuild our website. We're using AI almost every day now here in-house at Banríon. And so I think the spend numbers will continue to rise as the traditional spenders on technology that we've seen, the hyperscalers and the like, will continue to spend at a high level. But I think you're going to start to see outside, like derivative types of exposure to AI. As I said, we internally at Banríon are using it practically every day now.
Talk to us about Marvell Technology. I know that's one of the names you like.
Yeah, so Marvell is a company I've been following for a really long time. It is a semiconductor company that does custom silicon. It recently announced partnerships with a lot of the hyperscalers. It has a partnership with NVIDIA, and about a year ago is the first year that we started to see this stock and the company generate profits. For a long time, the thesis on Marvell was they had this huge backlog and there was a lot of demand for their products, but they were unable to keep up with demand. And for that reason, the company was not profitable. And about a year ago, we saw that change, and now it's sort of we have sort of the mechanism where that is, the momentum is there. I think that Marvell is going to continue to see its partnerships grow. It's now, I think, associated with every major hyperscaler, which was not the case even a year ago. The partnership with NVIDIA and the growing need for computing and for just any of the inputs for AI is there, and so they are going to benefit from that. And so that's a stock that I've followed for a long time, I've liked for a long time, and now we're finally seeing that story kind of play out.
And let's talk about Occidental Petroleum, tickers OXY. Energy stocks are the best performers in the market this year because of the rising oil prices, and of course the demand picture looks good. How is Oxy set to benefit?
So it's really interesting. When I was thinking about, I wanted to have an energy name in my like recommended stocks for these types of TV and media opportunities. I wanted to include an energy name, and I actually went and searched through a lot of names that I've followed for a while, Oxy being one of them, and they're not all good. In fact, a lot of them actually don't look great right now, and they have horrible fundamentals, and they don't have great tailwinds. But Oxy's kind of the exception to the rule there. They've had some recent acquisitions that have been accretive. Of course, Warren Buffett got involved in this stock about 3 years ago, which kind of put it on people's roadmaps. They have stronger balance sheet than most. They're involved in the Permian. And so from a domestic perspective, you know, as we try to move away from being as dependent on foreign oil, that this is a positive. All of these things kind of help Oxy. It's one of when I screened for energy stocks, it was one of the ones that was way up on top of the list. And again, one I'd followed for a while. So again, I looked at a lot of energy stocks, and I think people are inclined to just go into an energy ETF or just energy in general. And I would give pause to that idea, because when I went and screened, there's a lot of haves and have-nots here, and there's very specific geopolitical and geographic risks associated with some of them, and how they extract oil. Offshore drilling obviously is more expensive than other forms of extraction, so all of these things need to be taken into consideration.
Shana, thanks so much for joining us. Appreciate it. As always, Shana Sissel, founder and CEO of Banríon Capital Management.